What's up, everybody, and welcome back to the LV Home Experts Radio Show. This is where we talk about real estate and financing out here in the Las Vegas Valley. And today, got my co-host, Dan French with Guarantee Rate, the loan guru. What's going on, Dan?
What's up, guys? It's been a while.
I know. How many weeks has it been?
Oh, man, I can't even remember. It's, you know, if it's been, I think it's been at least a couple, 2-3 weeks, man.
I know.
It's been a while. So I'm glad to be back on Wednesday, back to the grind, you know what I mean?
Yeah, I know. Well, we have a special guest today. And, you know, you guys have been watching the show for some time. You know, we've been having a bunch of dudes up in here. Mm-hmm. It's time to get some females up in here, you know what I mean? Some strong women.
Take away that must smell.
Exactly. That's from you. But I want to introduce you to Yvette Amadon. Is that how you pronounce it?
Yes.
Did I say it right or did I screw it up?
No, you said it right.
Oh, okay. She is a lender, loan officer with Fairway Independent Mortgage, correct?
That's right.
Okay. So the reason why I brought you on to the show today is because in this industry, I feel like there's just a bunch of dudes. There's not really too many women, right? Would you say that? Or am I wrong?
In the lending industry?
Yeah, in the lending, the real estate. I feel like it's more dominant through like men.
I think in my business, or at least my experience, women have actually come in quite a bit. I mean, it's probably a blend of 50-50 now. I mean, when I first got in 12 years ago, I think you were right.
Yeah, because I was literally like on, I think it was like on Instagram or maybe like Facebook.
Yeah.
And I started like seeing these like pictures, right? Modeling pictures with like certain motivational sayings, right?
Yeah.
And I was like, yo, this is a vet. This is sick. I got to get her on this show. So I knew that, you know, she's a strong woman.
Yeah.
So I was like, you know what? We got to get her on the show.
Yeah.
Because we don't have any women on this show.
It's a women's perspective, right?
Yeah. So Yvette, let's talk about you a little bit. How long have you been doing mortgages?
Well, I've been in the business altogether almost 20 years.
20 years?
Wow.
I started when I was 19.
Wow. Is this the only job you had?
Yes.
Oh, so you're good at what you do for sure.
I moved around, you know, I did underwriting for a few years. I started as a loan officer assistant and then a processor. I was a processor for quite a bit. Okay.
Can you explain the difference between a underwriter, a processor, and a loan originator?
So a loan LOA, loan officer assistant, pretty much assists the loan officer gathering conditions, getting the file into closing. A loan officer originates. You know, we find the program for you, the right, you know, fit. We structure the loan, and then once it gets into contract, that's when the loan officer takes over.
Can you put that mic up a little bit too?
You know what? I've been trying this whole
Tighten
time.
it.
I've tried.
No, the other
No,
one.
the other one.
Okay.
The other one.
No. See the little.
Yeah, right there. Right there.
To your right. Right there.
There you go. There you go.
Twist that.
The other way. Boom. There you go.
Okay.
You got it?
Yes.
There you go. So you started off at 19.
Yes.
Like you could have did anything out else, what made you get into financing?
Well, what happened was in high school, early high school, my parents wanted to buy a house.
Yeah.
They were denied twice with no guidance. Nobody would tell them why they didn't qualify. They just, you don't qualify.
Yeah.
It was a little bit later when we ran into, we went to a party, a birthday party. We ran into a loan officer, and we told her our situation, my parents' situation, and she helped my parents. She did tell us initially that they didn't qualify, but she spent so much time helping their credit, improving their credit, paying off collections. Instead of paying off collections and not negotiating, getting a deletion letter, because that helps. There's a difference if you don't get your collections deleted. Yeah, it doesn't help, right? So there was just so much work that she put into it, but finally got my parents approved and got him into a home. The loan officer didn't speak Spanish, so I was involved from like A to Z, gathering conditions, just everything. She was impressed with me, so she was like, you know what, I'm looking for a loan officer. Would you be interested?
Oh, wow.
And that's where it started.
Oh, crap. So as an assistant, how long were you working as an assistant?
5 years.
Okay. Then you moved on up. What'd you do from there?
Loan processor.
Okay. So from a loan processor, did you do the underwriting after?
No, I jumped into being a loan officer.
Okay.
I got a little stressed out and burned out.
Yeah.
So I decided to try underwriting. I did it for a few years.
And how did you like that underwriting?
I did. I liked it, but and then it got a little boring.
Oh, did it really? So you pretty much have experience.
Yes.
From every single angle when it comes to financing.
We can say that.
Which is, I think, is a good thing, isn't it?
Yes.
Okay. So you basically know how to process it. You know how to put everything together. You know what the underwriter's going to look at, correct?
Yes, what she's going to ask for. I know how to calculate. I'm pretty good at calculating income without using the income calculation worksheets.
Oh, really?
Yeah.
Okay. So let me ask you this. You've been doing this now for 20 years, okay? And you got your own niche, I take it, right?
Yes.
So what is that niche?
So I work with the Hispanic community.
Okay.
I do have a radio show in Spanish.
Oh, nice. The only thing I know is Hola, ¿cómo está?
Hola, ¿cómo está?
Hola, ¿cómo estás? So I've been doing that for a while, and that's how I generate my own leads. But I guess you can say I specialize in first-time home buyers, guiding them to improving their credit, how to build credit, and getting a qualifying score, and also keeping their credit in good standing. So, because in the future, people sell and buy. It's important to keep your credit good.
Isn't that a great story where you helped your parents and you helped the loan officer, and she was able to identify, like, hey, you know what? Here's a niche here. And you're still doing this 20 years later. That's crazy.
Yes.
Yeah, that's good.
Yes. I like that because I have one agent that's Hispanic, but I don't have a loan officer that's Hispanic. And there you go. So walk us through the process. You said most of your clients are Hispanic. So how do they get a hold of you, or like, is it from another agent?
I do get a lot of referrals from agents, but I do get a lot of calls from my radio show.
Oh, do you really? What's that radio show?
It's 96.7, La Campesina.
Oh, okay. Remember that, guys.
And it's on Saturdays at 10 a.m. if you want to.
Okay, so it's from 10 a.m. to what, 11 a.m.? Or?
It's only 30 minutes.
Oh, 30 minutes.
Yeah.
Okay, cool. And you guys get a lot of calls in?
I get tons of calls.
Oh, talking about calls. If you guys want to call live in the studio today, go ahead and call live in 702-409-4495. Call in the studio live today, 702-409-4495. And if I don't answer the phone, I do apologize because sometimes I tend to forget.
Call, but we may answer, we may not.
Yeah, that's how this show works. You know what I'm saying?
It's if you're lucky. No,
yeah.
just playing.
Is your phone charged?
Oh, yeah, it is. So let me ask you this. As far as like first-time home buyers, because you deal with a lot of first-time home buyers, what kind of programs are out there?
FHA is my most, common one that I go to.
Yeah.
Especially because my typical buyer is not very credit aware, I guess you can say. They do a lot of cash.
Okay.
They don't have a lot of credit.
I have a question. Do you do a lot of I-10?
You know what? I used to. I used to do like 2 to 3 a month, but the investors kind of got away from
Brokers?
the program. Mm-hmm.
Did you broker it?
Yes.
Explain the I-10. What is that, guys?
So an ITIN is a borrower who doesn't have a Social Security. They have an ITIN that is provided by the IRS to do taxes.
Oh, so that's interesting. So let's get a little bit more into that. So what you're saying, correct me if I'm wrong, if I don't have a Social Security card, I can register.
Not a card, just a number.
I'm just saying, like if I don't have my own personal Social Security card, I can get a number from Social Security to buy a home?
Yes.
Yes.
Are you sure that's not set up for deportation?
No.
Well, I heard. No, I'm just playing. I'm just playing. But you know what's crazy is they do have stuff out there called Dreamers, right? And they have, it's similar to like having a work visa. It's almost like a way for you to be here and work.
Okay.
And give you get an exception.
So is it more for like, let me just run the scenario. It's like parents that don't have a social, but the kids may have one or something like that, and they lived here for so long.
It could be parents or just people in general. I mean, they might have just.
I'm just giving you a scenario.
Yeah, but correct me if I'm wrong too. But I mean, the I-10 you would have to put down. There was like usually a little bit more down payment, right? More restrictions.
Yes.
So these programs are there, but you gotta meet the requirements. And a lot of people think it's just easy to go out. So I don't want to bombard her if people are listening. Yeah. But it is a little bit harder of a program. And some of these investors, these broker options, they're no longer offering them like they did.
And you know what I notice is like sometimes I'll send deals to lenders, right? If they feel that the deal is hard, I feel like sometimes they just kind of like say, hey, you know what? I'm not going to do the deal in a nice way. But it seems like what you do is you literally take a look at their financial situation and you help them out through the process, even though it takes a long time.
Right.
Why do you do that? Versus other lenders, when you could just get easier deals, knowing that, hey, this is a good credit score, I can just close the deal.
Right. So it just takes me back with my parents' situation that nobody wanted to help them. And when we found somebody that did and helped, I mean, it was the greatest achievement. Yeah. You know, like the family, it just, you build memories in a home, you know what I mean? That's cool. And they're still there. And
I'm sure you probably build a relationship with these families, right?
You do. You get to know other kids, their life story, when they, immigrated here and why, just everything.
Wow.
I think that's like your why, right? It's like you got a motivation because somebody turned you down, and it's, I don't know, it's one of those things that it's almost like, hey, if I can do this, we can help other people do it. Yeah. It's not, I think sometimes the people make it harder than what it is. And it's really not that hard. Like they just have to maybe open up and just give some direction.
Exactly.
Right? Exactly. And I think that's what you've provided, which is amazing.
And it does take a little time, but I mean, to me, it's worth it.
Okay.
It's worth it.
That's good. I don't know. For me, I'd be like, you know what? Throw them on a drip system.
Throw them on. Well, and also too, like, I think it comes back to scope of work, and you got to know how to communicate with people. Yeah. And there's different types of people that it's like a chameleon. Yeah. You got to know how to approach them. They might need a little bit more hand holding. You got somebody that has 10, 15 properties that's investment. How much work is that if you have to do that manually? It's a ton, right? So sometimes, like you said, Chuck, lenders don't want to pull up their sleeves and do the work. That's another example. Yeah. Yeah.
That is crazy. So like all the people that you do work with, how many of them like fall through where they just realize it's just too much work, I don't want to buy a home?
Not that many. There's out of all the people that let's say, like 1% of everybody.
Oh, that's not bad.
No, because they all want it really bad. And when you give them like hope that that you're gonna help them, if they have to stick with the plan, right? Yeah. If you give them hope and a light at the end of the tunnel, they'll stick to it.
I think. Yeah, go ahead, Chuck.
No. Go ahead.
No, I was just gonna say, the 1%. We always talk about on this show that everybody always tells me, is it too soon to get started? Regardless if it's financing or buying a home or whatever it is. And, maybe some things you don't want to get started too soon. Maybe people have that credit score hit, but you have to get started. Like, for instance, if somebody wants to get your information or try to get help to know what they need to do, you have to pull your credit report. And so I always say it's better to start sooner than later, because that 1%, the reason why it is because she's probably putting a game plan just like I do. Yeah. Putting a game plan together, which may take months. But you know what? You'll still get what you came to get, right? And I think that's the misconception. People get discouraged because they get that one and done. Like, oh, I can't get it done? Okay, I got no hope. Now where do I go? And if you provide that direction, even if it takes 8 months, that's what people are looking for.
Exactly. And that's something I talk about on my radio show all the time. People might not be ready at that time to actually go house hunting, but, you know, when you're ready, why not already know, you know, what to expect, how much down payment you need to save up while you're cleaning up your credit or building credit.
Yeah. So going back to the Social Security thing, okay, if they don't have a social, how do you pull their credit? Like
with an I-10.
Well, they got to go get an I-10 first.
Yes.
But that's like getting a number or a Social Security card, right? But my question to you is, how do they know they're credit worthy?
So we pull credit with the I-10 number,
okay.
And you'll be surprised. A lot of these people have excellent credit with an I-10 number.
Yeah, but how do they even have credit if they don't have a Social Security card? That's what I'm saying.
Oh, okay. A lot of them are able to buy cars, credit cards with their I-10.
So they use the I-10 number to go out and purchase things.
Yes.
Okay, so they can't do that until they get the number.
Oh, okay. So what they're doing is they already have an I-10 basically, but they don't have a Social Security card. But that I-10 allows them to pay taxes at the time. But then they come to you with their I-10 already, and they've already established credit.
Yes.
So what happens if they don't have an I-10 just yet, but have like a bunch of money?
Well, like I said, there's programs like Dreamers.
Yeah.
There's different programs out there that give you like almost like a work visa.
Yeah.
Where if you stay here long enough, they'll keep renewing it on a yearly basis.
Oh, gotcha.
And so that's where this stuff comes in. It's a lot of times it's just similar to like getting a work visa if you're from Europe or wherever. Mm-hmm. If you keep renewing it or you have a specific type of visa, then they'll let you work here and you can actually buy a home.
Okay. So walk me through the process. So somebody comes to you. You guys sit down and have an appointment. Like, how does that work? Like,
yes.
Explain that to me.
So, well, first things first, you know, I explain the process that I do have to run credit with an I-10.
Yeah.
And based on their credit score, that's how much they're going to put as down payment because there's different levels.
Okay.
So the minimum is 15% with the 700 credit score and above.
Oh, so you have to have a 700. That's pretty high.
See, there's a higher restrictions, right?
Oh, crap.
So, and that's where it comes in. It's like these programs are there, but it doesn't mean that it's a free-for-all. Everybody's still got to meet the qualifications just like a loan.
So they come in, they have a 700 credit score, okay? What are the things that you look at?
They the requirements are the same as a regular loan. They have to be, you know, work history, 2-year work history. They have to file their income taxes. They have to provide pay stubs, bank statements, all of that.
So is that something that they should already bring in with the first meeting?
Yes.
So at this point, you're already prepping them and you're telling them, bring all this stuff in.
I give them a list before.
Okay. So when they sit down with you, you're getting qualified. Would they be able to know exactly what they would be qualified right there and then, or does that take a process?
No. Yes, right there and then.
Okay. So now once they are approved, now they start shopping for a home, correct?
Correct.
So walk me through this. So the agent goes out there, finds them a home, they send over the contract. Explain that process once you get the contract and it's fully executed.
It's just like a loan. We package it together like just like all the other lones, and we submit it to the broker.
you got to pretend that I'm a first time home buyer.
Okay.
I know how it works.
How about this? Let's talk about this, Yvette. Explain what explain what brokering is, so clients understand what that is versus a direct correspondent lender.
So I work for Fairway Independent Mortgage, and instead of doing the loan through Fairway, it's a broker that we have to broker the loan to. Yeah. So they disclose their own disclosures, and we package the loan up for them and send it up to the broker.
Oh, nice.
They have their own underwriting, and their own closing to apartment, all of that.
So when you start brokering deals like that, is the restrictions a lot harder?
Yes.
Ooh.
The other thing too about brokering is that it disarms you a little bit as a lender because they control the file. Yeah. Right. So it's the underwriter. Like the difference is like if I have an underwriter and I'm saying, look, we're on the fence. Can I get an exception? For instance, I had a FHA streamline loan and I had to get an exception. So I go right down the hall and I talk to my underwriter and I say, look, the front end ratio is not where we want it to be. Can we still sell it? Can we get an exception? They go and talk to the investor and they get an exception. The broker part of it is a little different. You don't have opportunity like that. It's either black and white. So it takes a little bit of your of your capabilities away, basically, right?
So it sounds like it's better not to broker out the deal, right?
Right. Not unless you absolutely have to. They have account reps that we have to, communicate through. So like we have to call the account rep if we have issues, and they communicate with the underwriter. There's always like that third person in the middle that does the communicating instead of like going down the hallway and speaking to your underwriter directly.
So with these FHA loan programs, are there like down payment assistance still?
Yes, there is.
So would you say a lot of your clients are using the down payment assistance programs?
You know what? I don't do a lot of down payment assistance programs, but I do them every now and then, but they are available. I don't like to promote those because usually the interest rate's higher.
Oh, really?
Mm-hmm. And they have restrictions like you can't sell or refinance for like 3 years. For the first-time home buyer, you can't sell or refi for like 7 years, and the interest rate's higher.
What would you say is the average income level with the clients that you deal with?
About 50 a year.
About 50 a year. And based upon like 50 a year, what are they normally qualified for?
Well, it depends if they have...
I'm talking about excellent credit and no debt. Excellent credit, no debt.
Like 250, 260.
So if you're doing 250, 260, and the average market price point for a home is about $345 at this time, that's got to be very challenging.
It is.
For a home buyer.
It is.
So it seems like the agents that you're working with, they are probably getting offers rejected left and right.
They are, but we're still getting them done.
So you guys are just cranking it out then.
My buyers are out there putting like 10 offers.
But just getting them accepted. It's like, do whatever you can to get it accepted. Yeah. Oh, man, that must be frustrating.
It is, but
I'm sure once they get the home, they're pretty much happy with it.
You know what? A lot of my buyers, too, even if they qualify for more, they won't go for the full price.
Oh, really?
They want to stay in a very, place where they feel comfortable.
Okay, so they're more like conservative,
yes,
you'd say?
Yes, they're super conservative.
Oh, okay. Yeah. I see a lot of people, they just, like, when they get approved, they go all out.
They do. But no, my people are very conservative.
Yeah.
And, my parents are like that, too, though.
Yeah.
Yeah, it's a Hispanic thing.
Oh, is it?
Yes.
But what I've noticed, a lot of Hispanics, they want a lot of homes, man.
They do.
Like, I don't know how they do it, but they got a lot of homes.
My dad owns like 4.
Oh, really? Does your dad live out here?
Yes.
Okay. You said he was a broker too, right, or something?
No, I said he does construction.
Oh, construction. Maybe it was your husband's father.
Oh, my father-in-law is a lender in Utah with rate guaranteed.
Okay, see, that's what it was. I know I overheard something.
And I want to throw a shout out about guarantee rate.
Okay.
If you all saw the UFC fight on Saturday, guarantee rate was the big sponsor.
And you want to know something? Next time you plug something like that, you need to pay up. You on the wrong show, homie.
Guarantee rate.
Guarantee rate.
They were actually, which kind of crazy. Mm-hmm. Shocked me because I was watching the fight. Actually, I was watching it with Jason.
Yeah,
Jason,
I know.
Yeah, he told you. It's kind of crazy.
Did you watch the fight?
I didn't.
Oh, you didn't? I didn't watch the fight.
It was
on
Saturday, right?
I think so.
No, I was at a dinner.
Dinner?
Yeah, steak dinner.
Oh, crap. I love steak.
I love steak. It's my favorite.
Dude, I love steak too. What kind of steak did you have?
Ribeye.
Ooh, I'm prime rib. Yeah.
I like prime rib too.
Prime rib is good. I like it blackened. Where'd you guys end up going?
Cleavers.
I've never been there before. Is it pretty
good? Yeah.
Pretty pricey?
No, it's good.
Is it really?
Yeah.
Yeah, the first thing I look at is the price. I'm like, babe, we got to go.
Hey, what's that threshold for how much you would spend on a steak, Chuck?
You know what? Now that I'm getting older, I'm willing to spend some money on some good food.
Like how much?
Like $40 on a steak. You know what I'm saying? Yeah. Now, I did go out
You spent $40?
I mean, it's like a miracle.
Out of your mind, bro.
Dude, I spent $40. That's like a lifetime for me. I'm sure that's nothing for you, huh? All that money you making.
Yeah. I can't say nothing about that. My husband's probably watching.
I know. I'm sure you guys are balling, dude. So I know you guys are eating that shit every night.
Yeah, they're up in McDonald's Highlands or Ranch or something like that, right?
No.
Mm-hmm. Where do you guys live?
The Las Vegas Country Club.
Oh, look at that. Las Vegas Country Club.
Anything with Country Club?
Uh-huh.
That's money.
No, not really.
Las Vegas Country Club over there on Desert Inn, right?
Yes.
You guys got a house over there?
Yes.
They had that high rise over there, right?
The Regency?
Yeah, that was like the original high rise.
The original. Yeah, the Country Club was the original back in the day where all the mob bosses.
Yeah. Do you guys get the golf over there for free or you guys got to pay for that?
We have to pay.
Yeah, I think that's the one with the guard shack, right?
Mm-hmm.
Yeah. You know what? That is a pretty nice neighborhood. I don't want to say pretty nice. Actually, it's a historic neighborhood. Yes. So if you're into like historic Vegas, that place is pretty dope.
Yeah. You know what's cool too? I really enjoyed talking to your husband.
Oh, cool.
When he was here. Yeah, we had a conversation out in the front, so it was cool.
Oh, nice.
Nice guy. That's good. Really nice guy.
Yeah, he's all right.
Sound like a man crush to me.
That's about respect, man. You know what I mean? You got to give people respect.
Yeah. Yeah, chakits.
Don't be jealous.
I ain't jealous. I know Cole. He's a homie.
No, he's cool, man.
I know he's cool. He has all the insights, but you know, it's not about him right now. It's about her.
Yeah, what happened?
Yeah, I know. He had his
what brought that up was the fact that he drove the same car I did.
Oh, he did?
Yeah, he's got the same car, but it's in pearl.
Oh, okay.
Mine's black. Mm-hmm. That's why I was like, hey, wait a second.
Mm-hmm. Yeah. Oh, so now you got that bonding going.
We got a bond, man.
Yeah, they're homies.
We're homies. Wait, I call him every Saturday.
Is that you all the time?
At 2 a.m.
I was wondering. I'm like, what is going on here? I'm like, do I have to start checking your phone?
Oh my gosh.
Cole's gonna be like, who is this guy?
Let's see some of these questions up here. I can't even see it. Any good questions? If you guys want to call live in the studio, 702-409-4495.
Somebody's asking if you feel better.
Oh, yeah, I am. That's why we're doing the show. Explain the difference of being a direct lender versus using a mortgage broker.
I think she did that, but go ahead and do it again.
So,
well, no, we explained the direct lending, but not a mortgage broker.
It's kind of the same thing.
Oh, okay. Yeah. Oh, you know what? We got a call. You know what? We're going to take this call right here. That's right. Welcome to the LV Home Experts Radio Show. You are live right now. Who am I speaking to?
Julia.
Julia, what's going on, Julia? How's everything going?
I'm good. Is this Chuck?
This is him, the one and only.
Oh, good. I'm glad you're feeling better after your surgery.
Thank you so much for all the blessings. I do appreciate it with all the fans out there, especially with you calling in. I really, really do appreciate it. Do you have a question for us regarding?
I do. I have a question, Chuck. Yeah. So I dealt with the lender. He told me, little steps, what to do to fix my credit or whatever. Did everything he said. Credit is still sucks.
Hey, that wasn't Dan, was it?
It was. It was. And you referred me to him. But
wow.
No, I'm joking.
Wow.
Woo, that was a good one.
The first thing I was going to say is I'm not a credit person.
I'm only joking.
All right. So what's your question?
So I make the income. I only have say $6,000 worth of stuff that's like collection stuff it's old. And I was thinking about paying it off and just moving forward to buy a house. But I've heard that if you pay it off, your score could actually go down.
Okay. So you know what? That's a very good question. So in her situation, right, she spoke to a lender. She still can't get approved. She owes $6,000. How would you handle this situation?
Well, if you're willing to, start paying off your collections, it's very important that you just don't pay them off. You have to get them deleted. So when you're talking to the creditor, you have to tell them, hey, I'm willing to pay this off. However, I need a deletion letter. Because if it doesn't get deleted off your credit, it's not going to help. It's like if nothing ever happened.
Even though that you paid it off?
Correct.
So you have to get that deletion letter?
Correct.
Okay. So, go ahead.
All right. So that's good because I think that might help me because what is the baseline for to buy a house? Like say if I just want a $300,000 loan or $3,000 or $4,000, $100,000.
Baseline as far as?
The credit score.
Oh, credit score. Well, a qualifying score is 620.
Okay.
So now that would be dependent based upon which lender. Is that correct?
Yes.
So not all lenders will get you approved at the 620, but your company will do 620.
620. We're down to 620. Yes.
Well, let's just clarify. FHA doesn't have a minimum credit score.
Yeah.
The banks actually create that.
Okay.
So her bank would be 620. Some banks will do 580, but they might need to put 10 or 15% down. They may need to have reserves. Reserves are extra money in case something happens.
Okay.
So it depends. Okay.
So I guess the best thing what you're saying for her to do, and correct me if I'm wrong, is to pay off the balance in full and also get a letter from the creditor stating it's paid off.
You can actually negotiate and get a deletion letter. I've done it.
Oh, really?
Yes.
So from your experience, let's just say she owed $6,000. Could you actually get that deletion letter and also pay off at least half of it?
Correct.
Oh, so you can
and
do it.
And it also depends how old, because if they're really old,
yeah,
then you have a higher chance of negotiating a lower.
Gotcha. Got you. So now owing $6,000, she does that. How long does it take for her credit to come back up to the 620 so that way she can get approved?
Well, after you get your deletion letter, about 30 days for the collection agencies to report to the credit bureaus.
Okay.
And you'll start seeing your score go up.
So does it go up pretty dramatically?
Yes.
Okay. Now, before, we used to talk about like rapid rescore. Does that still exist?
Yes.
Okay. Now, is that something that you guys offer and can also do as well?
Yes.
Okay. Can you explain what that rapid rescore is?
So, for example, I have a client right now that I'm doing a rapid rescore. Her score was a little low. I needed to get up about 5 points. But all she needed to do is pay down a credit card.
Yeah.
And instead of waiting the whole 30 days for it to report to the credit bureaus, we do a rapid rescore where we show the credit company that we use that she paid it down, and the credit company that we use does a rapid rescore based on how much. So basically, she paid down the balance, and based on that, that's how much your score will go up.
Gotcha. Got you. Okay. Did you have any other questions, ma'am, for us?
No, that's it. And those are some good follow-up questions. Thanks so much.
Well, I do appreciate the call from the bottom of my heart, and you have a blessed day, all right?
You too. Bye-bye.
All right, take care. Oh, that was a cool caller, huh? Much love, much love. See, I got another. Look at that, I got another call to answer the phone.
How are you paying attention to the phone when we do it? You just like never even look at the phone. Now today she's here. You're like, oh, I got like 10 calls.
Well, the problem is that I'm trying to mandate everything. You see what I'm saying? Like,
yeah, but you're
Look,
doing.
I think somebody's asking for my phone number.
Oh, what's the telephone number? Let's give a you know what? Talking about that, let's do this real quick. Let's check out her website. Look at this.
Somebody called you, Dan. Said I had a call into Dan.
Oh,
good.
So here is a
cool
vet's website here.
Those are like glamour shots. Those are nice.
Oh yeah, I went all out.
I know.
I wasn't messing around.
Somebody bougie up in here. But that's okay. I do the same thing.
See, that last look was like, dude, I got this.
Look at it. This picture right here. This is a strong woman right here, dude. Like, she gonna get it done.
Yeah.
You know what I'm saying? Let's get a loan.
Follow me, Dan. Get your phone right now and follow me. No,
Follow you? Follow to the promised land.
Hey, how does it feel when you have like two lenders in the room? Does it feel like we gonna fight?
No.
Not at all?
No.
Really?
I got my own book of business, man.
Yeah.
She's got her own book of business. I don't need to worry about nothing.
Because you know, when I know it's like in this industry, like when you get a bunch of realtors, everyone's like all big chests. Like, yeah.
Here's the problem is that,
you know what I'm saying? I'm like, dude, relax, bro.
I think that people don't understand there's more than enough business for everybody to go around.
Uh-huh.
Not everybody. I mean, like one person's not going to affect somebody else's business.
Yeah. No, you're absolutely right. And she's got a whole different niche that you can't even touch. You know what I'm saying?
And you know, and that's good because what if I have a Hispanic client, right?
Yeah.
Guess who I'm calling?
Yeah. Let me ask you this: do lenders do like referral fees?
Yes.
So let's say.
Oh wait, no. You have to be from the same company, right?
Okay.
Yeah, I've never.
I thought you could do a referral fee.
Yeah, you got to be from the same company because it's got to be where you're a lender and you know that lender.
Okay, so what about like out of state, California? Boom.
Within the same company.
Yeah.
Same thing.
Yes.
So
it's different than real estate. Real estate's like, hey, if you know another realtor, you get a realtor fee, right?
Exactly.
A referral fee.
Mm-hmm.
We're governed a totally different way.
Yeah, you're absolutely right. Let's take a look at what else we got here on the comments here. Where's everybody at, man? Normally we just have a bunch of people just hitting us up. You know what I'm saying?
I think what it is, man, is you've been hiatus for 3 or 4 weeks.
I know. Everyone's like, what happened?
They probably be like, oh, they canceled the show.
See what happened? We should have done a Zoom from you at home.
Oh, yeah.
But you know what?
In the bed aching, crying like a little bitch.
Yeah.
You might not have got that phone number. She said, hey, can I get that phone number? So being in this studio right now, that person asked to get your phone number.
That's true. What's your phone number?
It was 702
702
813 8638.
Say it again.
702-813-8638.
Yeah, give her a call because she's going to hook you up.
Yes.
That's what I'm saying. And make sure to send me the referral fee too as well. Let's get into the next segment. Let's get into the financing with Dan. What is going on with the financing?
Well, what's going on, guys?
Come on.
Somebody said, I'm just reading something, though. They said something about waiting on a VA loan from Dan. So it's kind of like looking at that guy.
All right. Well, we ain't worried about this. Let me run the show.
So let's talk about it, man. I was just looking at, sorry. Mortgage applications decreased.
Okay.
And rates went up. And the reason why they decreased is because rates went up roughly the last couple of weeks. Monetary policy came out, and they were doing some easing on that. And they cut the Fed's fund rate, or the benchmark rate, down to the lowest it's been since 2008.
Okay.
And so that's what the Fed lends out to other banks on an overnight basis. So all that's important because it has a strong impact on the economy. It has a strong impact on what's going to happen moving forward. Now, rates did go up. That doesn't mean that rates are going to continue to go up. I think that we can't afford it. You know, they came in and still did. They had the Fed's meeting today. And when you look at their purchasing still $120 billion in bonds, we're going to keep rates as low as they can. They're looking at inflation, right? We can't go over 2%. And they're going to be, gauging on that. We talked about right now bonds are suffering a little bit. And, one of the reasons you're looking at this is that there's a stimulus package coming out potentially. And when you start hinting on that, there could be some issues with rates staying low. So it always comes down to what's going on in the economy as a whole. Right now, you got the stimulus package going on. They're talking about the vaccine. So they're going to keep things, even, going forward, just pretty much steady Eddie, if you want to call it, and purchasing these bonds and monitoring the inflation rate, because all of these things impact what mortgage rates are going to do. So right now, I would say that it didn't go crazy. Everybody thinks when rates go up, it's like, oh my God, did they go to 3.5%? No, they only went up to like maybe 2.95%, something around there. And so, you got to keep monitoring this, but it's interesting because they cut the Fed's fund rate the second time, and they haven't done this since the crisis of 2008. What is this doing? It's trying to stimulate the economy. And that's what the Fed's doing. They're trying to intervene. Janet Yellen, she's the Treasury now, and she knows all the ins and outs about what's happening with the Fed's fund, with the Federal Reserve. So she kind of knows how to manipulate the economy. And I think they're going to continue to do this. Now, are we going to see increases? I've been telling this all the time. Are we going to see increases this year? Maybe even next year? Probably not. We probably won't see anything 2023 where things really start to get back into being normal, but it's going to be determined on what's happening with the inflation report. So year over year, we have, applications up, purchase indexes up, but over the last couple of weeks, they've actually come down. And the big reason is, we talk about this all the time, Chuck, rates influence people, and they influence on what people are going to do. It's so funny how everybody looks at this stuff online, right? Do it, baby. And, and that's what happens, right? So I think people are still looking at it like, oh my God, rates are going up. It's not going to be for a very long time. It's just not.
Is that it?
That's it.
Damn, you did a great job on that.
Yeah, good job. Good info.
No. So what do you think is going to happen to our market in 2021? Do you think there's going to be a real estate crash?
No.
Damn.
You got to ask yourself a question too. Like, why would it crash?
Well, so you don't think it's going to crash at all?
No.
What makes you think it's not going to crash?
Well, first off, we don't have, so everybody's trying to compare our situation now with the 2008.
Yeah.
And we don't have all those crazy loans that were out.
Yeah.
Like the 100% financing, the no asset, no income. We don't have those loans out anymore. Right now with the forbearance, the mortgage companies are helping out people with forbearance. So, we have all that help right now. So in my professional opinion, no.
Okay. Are you doing more loan applications now than ever before?
Yes.
Ooh, that's crazy. And what about refinancing and stuff like that?
That's what I'm doing mostly right now.
Oh, really? So a lot of your clients are coming back to do the refinancing.
Yes.
Okay. Especially with your book of business for 20 years. So they're all just coming back now.
And a lot of people are also doing a lot of cash out right now to do home improvements, and because rates are low.
Do you think a lot of people are doing cash out refinancing to pay off their debt that they have, or they are actually improving their home?
They actually are improving their home. I get a few here and there that they have a lot of debt, but my people don't really get in too much debt like that.
Okay, well, I guess that makes sense.
They're pretty conservative. Yeah, they don't have $800 cars or nothing like that.
So they pretty much pay everything off.
Yeah.
That sounds like
we're cash people.
Yeah, that sounds like me. I'm paying cash.
My dad, you know, when growing up, my dad was, every time I wanted to get a credit card, you know, no credit.
Oh, was he paranoid?
Yes, they just think like credit is like evil.
Dude, you got to play the credit game. So that's probably the hard part, right? Is the educational part. But what about the Hispanic community, the younger ones? Obviously, they live in America. They know how to play the game. So do you see that problem with them too as well?
Yes.
Really?
Because they listen to their parents. I listened to my dad, you know. I didn't have credit for a long time. Even in my early 20s, my mid-20s, I didn't.
Wow.
I was afraid of credit cards.
Well, let's talk about that real quick. If somebody doesn't have credit, how do you build a credit really quick?
You have your parents add you to your credit card as an authorized user.
Yeah, but their parents don't have a credit card.
You know, a family member, they'll find somebody.
Yeah.
Yeah, but, you know, that person that adds you as an authorized user has to be responsible, right? They can't have a credit card maxed out. They have to have, you know, no late payments, good established history. Because if you don't, then that's just going to affect you.
Yeah, I guess that would make sense. Yeah. But I don't know if I could add somebody to my credit card. I'd be paranoid. They screw my shit up.
Don't give him one.
Yeah, that's true.
Just add him.
Yeah. How would you build your credit fast?
Well, to go back and kind of like, I'm not gonna go into detail, but I think, you know, you try to get a credit card, you gotta maybe put into like a non-secured credit card, like you buy into it. That's probably the easiest way. I always direct people to different websites, especially if they have to get a rebuild quick. But you know, the thing about what Fannie Mae and Freddie Mac is doing is, especially with credit agencies, they're catching on, because a lot of this stuff is where you want to add somebody. Underwriting starting to check that out.
Oh, that could be scary.
Because, well, yeah, like some underwriters are looking at it now where they're like, "Hey, you did that just so you can get a better credit score." And
I'm playing the game. Why not?
But the problem is they're catching on to that. Like if you did it like right recently, like if you had it on there for a year, obviously you're probably on there. But if you're in a loan, and let's say you did it like 2 months ago, you're like, hey, you just jumped on there so you can get your. So with that, you know, I know you talk about deletion letters. You can definitely get that done. I know that a lot of creditors, it's hit and miss, where they're starting to catch on a little bit to that too, where it's a little bit harder to get that deletion letter, because they're like, well, prove to me that this was our fault. You know, if you can't prove to me this, why would I help you? Yeah. You know, and I'm not saying it doesn't happen. I'm sure it happens with her a lot, where they can maybe settle for half on whatever that is as far as the creditor. Yeah. But they're catching on. I mean, it's not as easy. Underwriting starting to check this out. So to answer the question, I don't know. I mean, my best thing is probably just to start on your own and pay into a credit card. Jumping onto people it could help for sure, like jumping on people's credit cards and stuff. But I don't know. I think
do it responsibly.
Yeah, there you go. Have you ever thought of having clients jump on your credit card?
Of course. Of course. I actually have a credit card delegated to all my clients. So I'm just playing.
He's got like 50 people on there right now.
That's all a compliance problem.
Yeah.
No.
Jump on my credit card and guess what?
Oh my gosh. All right. Any final thoughts before we end the show, guys?
Yeah, I got a couple things to say. So self-employed buyers, there's a lot of information coming out. You might want to check with me on that, because they're talking about profit and losses. We got the new scoop on what's happening with that, if you guys want to check me out after.
Cool. And Yvette, if people want to get a hold of you, what's the best way to get a hold of you?
702-813-8638.
And what about the website up here? Don't forget the website.
Oh, yeah, of course. MortgageDealsInHeels.com.
MortgageDealsInHeels.com. Don't forget to subscribe to, I think it was Instagram, right?
Yes.
Instagram and Facebook. What other social media platforms do you have?
That's it. I can barely keep up with those two.
Oh, so you just pretty much work those two? Oh, wow.
Now.
You know what? I'm like that. I'm off of Facebook. Now I am on Twitter. No, not Twitter.
TikTok?
Yeah, TikTok.
How is that?
You know what? I'm on and off on that thing. So.
Are you on TikTok?
No.
Okay.
You know what? Let me say this.
TikTok's the shit, bro.
You definitely got to look at it, because I think the younger generations, that's all they're on. So if you want to market to them, you want to get involved with them, definitely get on TikTok.
Yeah.
Guys, thank you so much for tuning into the show. Until next time, I'm Krulsawat with Simply Vegas. Peace.